A very warm round of applause. Our esteemed panelist, Chairman, BSE Brokers Forum, Uttam Bagri, with a warm round of applause, ladies and gentlemen. Welcome to the stage, sir. Devang Mehta, Head Equity Advisory, Centrum Broking. We're also joined by Kedar Deshpande, Head Retail Products, ICICI Securities. And this panel will be moderated by Chairman, OPC Asset Solutions, Ajay Bagga. Over to you, sir.
Thank you. Good afternoon. A very warm welcome to the panel. We have about 40 minutes, so we'll start off, without any further ado. Uttam, starting from you, our topic, valuation gains through equity markets, how to achieve $5 trillion. Your opening thoughts on the subject.
So, $5 trillion economy, we're talking about a GDP. And simple GDP, basic economics, the four factors of production, one of them is capital. And where will you get the capital from? India has been a capital scarce country for many years. From last 10 years, we have seen a good capital flow. But anybody who is in business knows what is happening on the availability of capital to businesses in the last few years. And the informal means of finance is always available at a very high cost. The only way you can get organized low-cost finances from the capital markets, be it debt or equity. So if you don't have an efficient fundraising platform in the form of capital markets, $5 trillion is a bit far away.
Kedar?
As we are progressing every day towards our 5 trillion goal, two or three things are very clear, like we all know. One of the significant reforms that the government has unleashed, which is not necessarily in the stock markets, but in the listed debt markets. So one of the big reforms that the government has announced in the last budget is that 25% of the incremental borrowings by large corporates have to be in listed debt. That will give a big flip to the markets. These will be traded paper. So it will increase the overall participation in the markets, broad basing the markets, and obviously will lead to increase in overall participation in the overall capital markets, because these will be capital market listed debt papers, will effectively bring down the cost of borrowing for good companies and automatically adjust the cost of borrowing for not so well run or companies with corporate governance issues. So I think this is one of the significant reforms which will increase the overall float in the demat securities in the market. And I think one ignored play, and you can already see listed commercial papers of good corporates trading below 6% on the capital markets, though unfortunately they are not liquid today, but it's a matter of time.
Thanks. Devang bhai, your perspective, especially from an HNI perspective, on how you see the broad brush, and then I'll come back to you with an HNI specific question.
Thank you. Good evening, everyone. I think, yes, a little bit about GDP, and then I'll come back to HNI. So we all know that the $5 trillion is just a number. We all are going to achieve it. When is the real question, right? 2023, 24, 25, 26, that's the real question. So if I can put it that way, that if economy is considered to be a train, ideally capital market should be an engine, which probably should take it a long way away. Second is the engine has to be powerful, it has to be swift, it has to be also not causing many accidents, which have happened in the recent couple of years. You can probably read between the lines some of the capital market accidents. The third is that, again, what I intend to say is your train is going to definitely reach over there, but according to Indian Standard Time, we all know that we go to a wedding reception 2 or 3 hours late. So if here we go 2 to 3 years late, it's a wasted opportunity. So $5 trillion, as I said, can be achieved. Yes, coming back to the question on HNIs, HNIs probably in India have seen a lot of, it's an understatement if I say they have lost a lot of money in real estate, maybe opportunity lost or money lost, I don't know what. but they themselves have realized that the shift from physical to financial assets is very, very essential. And that is where I think equity market plays a very, very crucial role. Of course, the last 2 years have been good and bad. I don't know, good for a lot of people who are invested in market leaders, large cap stocks, those 10, 12 privileged dozen stocks, which I always call, where you have made money, you feel at the top of the world. If you are in mid cap, you will feel like I can say a middle class guy. And if you are into small caps, micro caps, you will feel like a poor man. So that's the analogy. But yes, HNIs probably have shown a lot of keen interest. If economy is coming back on track, markets would probably discount it a little earlier. So they are interested in equity markets. Yeah.
Very excellent. Good insight there on. And, that is what all of us have seen over the last 2 years, thanks to the Ritik stocks. Markets have done well, portfolios haven't. So, secretly we see our portfolios, we keep quiet about it. And you see the funds also, a lot of funds are underperforming the market. But Uttam, then building on that, just moving the ball to you from Devang bhai, does trading make money? Or is it the buy and hold who makes the money?
Yep. So, and this is a no-brainer. Anybody who invests with a long-term perspective, this is a cliche now. Long-term will all make money. Trading there are two sets of people who trade. All right. One are professional traders whose business or whose life is to trade. Right? They would do a covered call strategy. They'll do lots of things with the options. Now, again, there is something called trading and there's something called gambling. Ghat gaya isliye le liya. I mean, that's the most ridiculous way of trading, which many of us do. But in terms of professional trading, I think lots of people make money. But that's the only thing they do effectively. Trading cannot be a part-time job. Unless you want to have fun, you buy 100 shares and 100 shares, so it's a nice topic for the party. That's about it. Otherwise, you have to choose good companies, either directly or through a decent advisor, and just hold on to them and change. And based on your study, on the basis of your advisor, you shuffle your portfolios on a periodic basis after due review. That's the real way of making money from an investor point of view. And for a professional trader, that's a different ballgame altogether.
Kedar, building on this, coming to you as, you represent ICICI, which has the biggest retail cachet, retail portfolio of clients. And, in markets, we say herd mentality amongst retailers, we say smart money. You've seen what the smart money has done. A very famous PE fund domiciled in US lost most of its book to, companies which were cooking their books. A lot of the family offices invested in the same papers. A lot of the big wealth managers sold clients those same papers. The so-called smart money lost its pant and shirt. How are the retailers doing? And is retail dumb money or is retail smart money?
Well, if I talk from the perspective of our ICICI direct customer base, then I think retail customers are very smart. Some of the logical points are that it's their hard-earned money which they invest, and hence they are careful. So they diversify their portfolios. We have seen our average client holding more than at least 7-8 stocks. So it's a diversified portfolio. You will be surprised to see, but there's a common perception that a retail guy comes at the peak of the market, exits at the bottom. Yes, you will always, with a base of almost 5 million clients, you will always find people who exhibit that kind of behavior. But as a larger mass, you will be surprised that when a market is really fallen badly, we will have a net buy. When the market is really rallied and maybe for some frivolous reason, you will see a net sell. And as a sum total with the 2 decades of journey of ICICI, let me tell you, 90% of our portfolio, and which is a large one, almost $2 trillion rupees plus, is in the top 50 stocks. So it speaks about selecting quality, staying invested, and majority people, by and large, would have made money if they are sitting in stocks like this. So it is quite contrary to the normal perception that retail enters at the wrong time. We have seen similar behavior in our client base in mutual fund purchase also. We had one of the highest participations in mutual fund way back in 13, 14, 15. And in fact, now, but it is mirroring the trend, now more or less mutual funds are, yes, there is a net inflow, but much lesser than the SIP inflows. So, yeah, SIPs are holding, but yeah.
So, we got some really brilliant insights for all of us as investors. One, if you're trading, trade as a professional trader, don't trade as a gambler. Otherwise, buy and hold is a better strategy. Retail money is also smart money. That trend is showing up. The buy and hold, sticking to quality, sticking to the well-run companies, start with that at the start of the portfolio. And then, those 5%, 10% portfolios can go into the lesser known companies. Timing, I think the retail money is very smart in not trying to time. Nobody can really time the market. Just to give you an idea, 2019, all the university endowments in the US, only 2 endowments made more than the S&P. So despite going into alternatives, looking for the latest emerging market fund manager, hedge fund manager, giving huge amounts of fees to fund of hedge funds, none of them really beat the markets. So Devang bhai, then when the retail investor is so savvy, what do you bring to the table for the HNI investor to get him invested?
Super. So, in fact, it's not retail versus HNI. It has to be retail plus HNI, all making money and maybe foreigners losing. So, maybe. So, I don't know. Yeah. So, coming back about retail, I can just substantiate a little bit about him. 10 years back when I used to travel to a lot of small towns, I traveled to approximately 125 cities and towns in India, doing a lot of investor events. At that time, why I'm telling you this, at that time, there was always a thought process after my event. I used to get a standing ovation and people, 10 लोग side में आते हैं, सर खोपचे में आ जाओ side में. ये सब तो अच्छा था, but कौन सा एक स्टॉक बताओ जो लाइफ चेंज कर देगा. ठीक है, एक मल्टी बैगर आइडिया बता दो सर. तो मैं बोलता था ये मल्टी बैगर या तो मल्टी बैगर बन जाएगा या आपको बैगर बना देगा. ठीक है, अभी का बिहेवियर इज सच दैट दे कम एंड आस्क यू कौन सी म्यूचुअल फंड्स में एसआईपी करनी है. So that behavior in retail has changed. Coming to the question on HNI. HNIs themselves, the biggest revelation that we saw in the last 2 years, if I can make that statement in the last 2 years, is people have curtailed their expectations of returns. So earlier, 2017, I still remember whenever after 17, after the famous budget of 2018, जब LTCG आ गया, उसके बाद I don't know क्या events हुए, mutual fund classification and all such stuff. उससे पहले अगर आपको HNI को भी मिलो, उसके भी return expectations 17 को recency bias को mirror करते थे. They used to say that we easily made 30, 35, 40, 45% in 17 in mid cap, small cap, index fund में भी पैसा बन गया, हर जगह पैसा बन गया. They used to just tell us that we also have return expectation of 25, 30, 35% even in 18, 19, CAGR, right? So after looking at 18 and 19, this has probably come down to somewhere around 14, 15% in equities, which is actually fair. Because you know that all the class of investors are not going to continually make that 25, 30% everywhere, because equity is not a linear asset class. It's a non-linear. The returns can be lumpy. You will get 30, 40% here, you will get 5% here, you will get a minus 20% here as well. So that the biggest behavior change that I'm looking at HNIs is they have curtailed their expectations. The best part is that they stay put, they have money power. A lot of people where we run strategies of 10, 15, 20 crores for long term, they tell us that you don't worry, you buy great stocks. I'm sitting there. If more money is needed, I'll pump. But you should hold the conviction to hold these stocks for a longer term. So that is a beautiful part.
And a lot of the money used to go into physical assets. India was 50-50 or 59-41. Now the physical assets are not being bought, especially retail, real estate is not being bought. Where is that money going to?
Ideally, that's moving towards financial assets. Now, to tell you the truth, a lot of money has not yet been released from real estate. So real estate, people have still invested. When you go to travel to cities like Delhi, you get to hear horror stories of people having 100 crore ka farmhouse, 100 crore ka land pada hai, 200 crore ka ye pada hai. So they also say that whenever this gets probably sold off, I need to put this money into equities systematically or slowly. But whether that trade is happening, whether there are trades which are happening on a panic level, that is very difficult to say. But there is all ammunition ready with a lot of HNIs who want to put it into maybe mutual funds or non-discretionary PMS like us, or PMSs or AIFs. So money is actually flowing into equities. But HNIs, actually you don't get that separate figure for HNIs. जैसे आप retail देखते हो, foreign investors देखते हो, मेरे हिसाब से रोज का आपको HNI का पैसा देखने नहीं मिलता है. But because there is more so long only type of a money which stays in an asset. So मेरे हिसाब से this money is still willing to come out from real estate, and overall also they are making commitments to infuse a lot of money into equity markets per se.
I need to add a point.
Yeah.
Probably I'll differ with you.
Sure.
And I think the audience will be with me.
Yeah.
So they want to sell the real estate as long as it's not getting sold. The moment they get a buyer, okay, किसी को माल नहीं बेचना है. अरे डर नहीं, real estate ठीक है, भाव आता है. So if I may take a couple of minutes, in the last 2 years, every asset class except gold has taken the investor happiness. Okay, equity in the small cap, mid cap space, except for the index, really the markets have behaved in the most strangest of manners. Real estate people have burned their hands. Interest rates aren't too great. All right, so everywhere, in fact, investor, I have so much money lying with me, what do I do with it? I will buy real estate, it's cheap. Shares, nah. So there's a lot of capital around, but there's no trust. So there's lots of scope for fixed income products, because last 2 years of burning your hands has really created a lot of interest in fixed income products, and that is something which is not being tapped. But on that real estate, I really don't think people will sell when the prices go up. I think.
Just one point here. Last year, fixed income was also not fixed. So there also people burnt a lot of pens.
That's a pretty, see, fixed income mutual funds.
Yeah.
The whole side pocketing and all. People were totally confused. And
Not only confused, you lost money. So it became zero principal. You got into fixed income thinking that at least
Very
principal is protected and I'll get a steady return. And then you realize there was credit issues. And when the bankers couldn't figure it out, bank NPAs on corporates were 22%.
Yeah.
So 1 out of 5 guy would run away with the bank money. What makes you think the mutual fund credit analyst who's never written an LC or a bank guarantee in their life, they could analyze it better? So I would say regulatory failure. I would say mutual fund trustee failure in allowing them to get in. And we have this issue. But building on that now, there is this whole global phenomena of moving into passive funds, index funds. There are robos. The personal finance section also talked about robo-advisors. Similarly, in the funds now, Goldman Sachs is hiring more software engineers than investment bankers. So what is your view on the India perspective? Will we also go the way of passive funds, index funds, and active fund managers will become an extinct species? All three, but anyone can go ahead.
So I think in US, I was just reading somewhere that whether the ETFs drive markets or the markets drive ETFs is a phenomenon, right? So what drives what is very difficult to say, because almost everyone invests in ETFs. And it's always said that it's very, very difficult to beat index. So it's like that always. There's something called, जैसे बोला था कि हनुमान को बोला गया था कि भाई वहाँ से आप जड़ी बूटी लेके आओ, right? तो वो जड़ी बूटी जब लेने गए तो उनको पता नहीं चला कौन सी जड़ी बूटी लेनी है, तो पूरा पहाड़ लेके आ गए. And that is where it's said that अगर आपको समझ में नहीं आता है निफ्टी में कौन सा स्टॉक लो, तो आप निफ्टी का ETF ले लो. And that's the trend which has started in India. It's very nascent as yet, because हमको एक बहुत वर्ड पसंद है जिसको हम बोलते हैं अल्फा, right? We all like alpha. और अल्फा के साथ कितना बीटा आता है वो किसी को नहीं पता है. So we all want to seek alpha. Seeking alpha, a lot of time we compromise on beta. And that is why I think Indians as a core would have asset allocation के अंदर a little bit of your ETFs. But to just compare it with the active fund, क्योंकि still we have this comparison bias that आज कितना म्यूचुअल फंड का NAV है, कौन सा का क्या NAV है, ये PMS ने मुझे लास्ट 2 महीने में ये रिटर्न दिया. Right? When I run a non-discretionary PMS, a lot of people question me 2 महीने में क्या रिटर्न बना. आई से रिटर्न बना भी है तो आपका स्किल है, मेरा लक, आपका लक है रादर, मेरा स्किल नहीं है. So it's about 3-5 years stories, but people compare it with that. But people who don't have any wherewithal to do anything, who does not have the time and resource, ETF is a good way. Yes, I'll surely agree. अगर आपको market को beat नहीं करना है, if you are happy with market rate of returns, which is again 14, 15%, 16% CAGR over the last 30 to 33 years, you are good to go there.
But I am worried. See, by ETFs, basically you're talking about index funds.
Yes.
Now, the whole index funds has become a self-fulfilling prophecy. And marginal cash flows have serious impact on illiquid markets like India. Even if you take whatever India's market cap is, 50% is locked with promoters. Another 20-30% would be locked with the long only mutual funds, the insurance companies. And then there'll be the Parsi investors who's bought the shares, put that port line, nothing's going to happen. The actual amount of float in the market isn't very high, even though you go for free. So small amount of money can move markets, which I believe is we are seeing in the indices.
So shallow markets.
We are a shallow market in terms of paper, and marginal cash flows are having disproportionate effect on the market.
So for all of us, it makes sense then to buy index funds, because the more we buy, the more the markets will go up.
I can't. But it basically, you're right. Yeah, you're
And
right.
second is,
but
I
you should know when to when the balloon is going to burst.
Yeah, who gets
you have to be
out
smart enough to get out.
Yeah, problem is who gets out first. If you're stuck, you're stuck.
But your retailers just stay put.
Yeah.
I think they are the ones holding up
absolutely.
the markets. They just stay put.
Yeah. So we believe that you need, I mean, there is a place for an index, there is a place for robo-advisory, there is a place for algos, and there is a huge place for people who like to do long-term investing, passive investing, and behaviorally, if you look at even the markets data, exchange data, not even 10% of the capital market active guys get into FNO or anything. So the large part of the retail population is actually a buy and hold kind of a population. And I guess
They are the smartest.
Yeah,
they
they-
make the money.
The last data I checked, the number of UCCs registered in the FNO segment is probably 2% of the number of
Yeah.
UCCs registered overall.
but still 95% of the volumes happen
More than
over
that,
there.
yeah.
So
But
that's
the
an
professional traders.
Professional traders.
See, doing 1,000 crore volume for an algo is a matter of
Few-
a couple
few
of
lakhs.
days.
Yeah.
So
They're going for 1 rupee. They're saying 5 paisa ticks, and they're looking at that. So, and the computer is doing it. So, one very big question. Warren Buffett always talks about market cap to GDP ratio, and as that increases, there is trouble for the economy. So, market cap comes first or GDP comes first? All three of you, quickly.
It's actually a chicken and egg. So yeah, you rightly said.
No, you have to choose.
No, my sense is market cap would lead to GDP growth.
Okay.
So market cap would lead to
Kedar?
GDP growth. Yeah.
So there are three variables. The efficiency.
मैं तो दो बोला market cap GDP तीसरा कहाँ से आ गया?
No,
Or
three
that-
variables which drive it.
Okay.
One is the efficiency of the capital. So if the capital is wrongly deployed, I mean, like you can see the infra sector took huge amount of capital, no
Very good
returns.
point. Yeah.
Correct. Point two is the construct. So as the economy grows tomorrow, there will be more sectors which are less asset heavy, will be more services oriented, and the capital efficiency can go up. And you can see economies which have more services oriented companies, the market cap comes first. Very nice. So yeah.
And third,
So.
पकड़ लिया.
Market cap आ गया तो GDP आ जाएगा.
it's a personal thought. I think it's a spurious correlation. It's a spurious correlation. We are talking about listed market cap to GDP ratio.
Correct.
So you don't capture the entire unlisted market cap.
Absolutely.
Tomorrow when LIC gets listed, India's market cap will shoot up. Wow, you think that's an achievement? Has it changed anything from economy point of view? LIC is still today. LIC is going to be tomorrow. Probably doing the same things. Just because it gets listed, the ratio changes dramatically. So frankly, I don't think that ratio makes any sense. It is. That's my personal opinion.
Okay, wonderful, wonderful. So see, refreshingly three different opinions, and it's very easy to be a panel moderator. अपने को सोचने का ही नहीं है. तीनों सब कुछ cover कर लिया. But I have to cover. I have only 6 minutes. They cut off 10 minutes of ours, so I have 6 more minutes, and I have a lot more questions. Huh? No, I think if I was the Prime Minister, Finance Minister, I would push market cap. GDP will, because we are very capital constrained nation. तो कैपिटल डालोगे तो आएगा. अभी क्या है, हम सब वेल्दी लोगों को चोर बनाते हैं. There's tax terrorism, there's going after anybody with wealth. So that whole thing, you see that Trump, when he was talking, Exxon CEO was standing, he was saying, hey, hi John, hi this, hi that. Can Modi say that? Ki, hi Mukesh bhai, hi Gautam bhai. They'll say suit boot ki sarkar. So the whole country, we have made this so socialist, so communist, that anybody with wealth is a pariah, which is a very wrong move. So I would always go for market cap. And we are market guys, so we have to. Next question, and anyone can start off. Do valuations really matter in terms of the performance of the market? Do we have to be, because at least the 30 years I've been in the markets, every time people will say India at a valuation premium. But hum kehte the PEG dekho, growth dekho. The growth factor in the versus the PE. But do valuations really matter? Do we have to be very worried? Anybody?
So I think I'll
very crisp.
Yeah, crisp बताऊंगा. So PE is clearly for a market level PE अगर आप देखते हो तो people say normally अगर 2021 के ऊपर जाता है on a 1 year forward तो थोड़ा expensive होता है. But in great stocks, just एक ही differ करूंगा. In great stocks, PE according to me, and I have patented this, कोई लिखना मत इसको. PE is more of participants' enthusiasm and promoters' enthusiasm rather than price to earnings. Okay, because वहाँ पे अगर promoter को अगर interest है business चलाने में, not in stock चलाने में, business चलाने में, और अगर लोग enthusiastic है to buy that company for the longer term, it will always get a great valuation. So of course valuation देखना भी चाहिए, and in hindsight, in great companies sometimes valuation matters, quality matters more, and valuation matters a little less in quality companies.
Quality. Kedar?
So from a retail investor's perspective, PE is important. So you can be patient. No stock ever runs away and then you can never enter it. So you can be patient like a cheetah. Let the deer come closer to you and you can eat it.
Luckily we are vegetarians. दोनों endangered species हैं.
Of course, valuations matter. We have seen 2000. It's not very far away. And we have seen
2018.
1992 also, if those who have been there. So finally, markets will come down to its to evaluation. If the companies are doing well, you can't look at only market. It has investment is a company decision. It can't be a market decision. And if the proper financial advisor, even if you go for index, it is the fund managers who decide every company, and they don't decide the buying and selling markets. So finally, it's down to valuation. If the company is doing well, and even growth, the G is part of valuations. So valuations matter, and that's the only thing that matters actually.
So see, in 4 people here, different opinions. So make up your own mind. But one very important question. In India, globally, see, Warren Buffett is sitting on 128 billion. He's saying valuations are not there. I'll wait it out. Howard Marks is saying the same. And Howard Marks in 97, he says this .com will fall. And he said, I was wrong for 3 years, but ultimately I got in at 2001. Warren Buffett did the same in 2008. He bought huge chunks of GE, of Goldman Sachs, Kodiyon ke bhav kharida. So, Sid Klarman. So, all the value guys are sitting on the side. 10 years their strategy is not worked, but they have the conviction. So, at times like this, you feel, oh, growth is all that matters. But one very quick question for all of you, which is so pertinent for us. 2 years, small cap, mid caps have not worked. Regulator also works against you. Sometimes they put it in, sometimes they take it out, and you don't know where to invest. So, does it make sense to stick to only quality? Or should you go looking for growth at a price in India?
So quality first, as I said, पहले हम quality ही देखते हैं. We look at quality first. Across large cap, mid cap and small cap, we are very clear we want to buy market leaders. So mid cap, there is a myth that mid cap, small cap does not have market leaders. There are also market leaders in mid and small cap
so
space.
Specialty chemicals market leader है कि growth opportunity है?
Market leader के साथ growth opportunity, दोनों है.
मार्केट लीडर के साथ
Yes,
ग्रोथ.
structure
सो देखो 1500-2000 करोड़ की कंपनी है, 600 करोड़ का ऑर्डर मिल रहा है.
Yes, exactly.
इट्स अ नो ब्रेनर.
Yeah.
MNC pharma, we were just discussing, we are so tired of Indian pharma. बाल्टी लगा के बैठे हैं, छत में से पानी निकल रहा है. That quality sheet में से 2 pages are missing. Obviously you are cooking the books. And 483 aata hai, 2 days later it comes on TV. By that time insiders have made the call. So we have been barking on pharma for so long कि ये turn होगा. Now we have given up. Maybe now it will turn that we have given up. But MNC pharma चला. 1-1.5 साल पहले खरीदा, it's working. So look at quality. Let it be वो PE जितना भी high है, with all respect to उत्तम मारेगा बाद में. But at least it's giving you some stability, some, yeah. So sorry to interrupt you, but short on time, Kedar.
Sure. So,
quality or growth at a price?
So,
Or growth at any price?
So please keep in mind, mid-cap is always risky, okay? So if anything happens with this coronavirus and money gets pulled out, you can see deep drawdown.
ये तो next question था, चलो. Anyways, उत्तम.
So,
Basically, study your company well and you buy. That's
So largely quality.
largely quality. It has to make sense.
So bigger risk, coronavirus or Bernie Sanders?
Will we survive Trump? So,
Will we survive Trump?
Trump, so
But Trump is pro-market.
see, I'll take the example of India. When we had a socialist bent of government, for 40, 50 years back, Indian businessmen survived in spite of the government. Now, when the government became very market friendly, we flourished. Similarly, throughout the world, humans find a way. Okay, businessmen find a way.
Indians are even better at it.
And
We are
Indians
used to such.
excel at it. So, I think politics cannot affect business beyond a point. Unless there's a law and order issue. In that case, you can't do much. Tax बढ़ गया, 5 साल बढ़ देंगे, फिर something will happen. That is not an issue.
Okay.
So, but coronavirus is a problem. This actually stopping economic activity, stopping people from going to offices, it's stopping people from shipping, disrupting supply chains. That is a serious problem. And the worst thing is, even suppose it becomes all right for next 5 days. After 1 month, there's one more case. Suddenly, epidemic in one part of the world. That fear. Okay, there's something can go wrong anytime. The uncertainty is what is hurting the business. That's a huge issue.
Indians should have no fear. जब वो mad cow disease था, I asked an uncle who's a vet in UP. I said ये क्या है? कहते एक तो cows को काट के cow को खिला रहे हैं, वो हम नहीं करते. दूसरा, our cows are immune to everything. So there are 15 types of coronaviruses. About 60 million people a year get the flu, the seasonal flu. About 600,000 die. US में 19,000 मरे हैं इस सीजन में फ्लू से. ये कोरोना वायरस वगैरह हम सब इम्यून है, not to worry. Yes, कोरोना और बर्नी.
Corona. It's a fear.
आपको US वीजा चाहिए.
फोकस ऑन कंट्रोलेबल्स, जो मेरे कंट्रोल में उसी पे फोकस कर सकता हूँ. कोरोना मेरे कंट्रोल में नहीं है.
हाँ, बहुत.
मैं अपने पोर्टफोलियो पे कंट्रोल कर सकता हूँ, नॉट ऑन एनीथिंग एल्स.
Very nice. So portfolio construction, look at all these issues. Very good point. See, again, if you look at SARS, you look at MERS, you look at Ebola, first couple of months GDP नीचे जाता है, markets go down, then they just in 6 months they are up. Now, what is not factored in also is central bank intervention. China has put in $300 billion today, Shanghai was up. So that we don't put in. We think ceteris paribus hota tha na economics mein, कि everything else staying constant. Everything doesn't stay constant. बहुत dynamic है, central bank आएगा and central banks convergently आएगा, they will take care of it, is my thinking. और धूप बढ़ेगी, गर्मी बढ़ेगी, Trump uncle भी यही कहते हैं. And some people have said at 28 degrees it dies. तो इंडिया में तो नहीं आना चाहिए, we'll see. हर आदमी खांस रहा होता है इंडिया में. So we are out of time. Organizers, do we have 2 more minutes? Huh? Yes. The audience have taken over. So audience questions, yeah, to anybody, or you can name the panelist. Arindam, do we have 2 minutes? Okay.
So my question is, market is looking for demand to bounce back. And in the budget, we were pretty disappointed that not much steps have been taken to enhance demand. But if you see the Hong Kong budget, it's a super budget. Can our government learn or copy paste something from there?
I tweeted last night, you would have seen lesson for India from the Hong Kong budget. $10,000 they are giving to every adult. Everyone above 18 years. Because see now, what is the difference? When the central banks cut rates, you are inflating the asset prices, so only the wealthy become wealthy. The poor man, uske jeb mein kuch nahi jata hai. Isme they are directly giving 10,000 Hong Kong dollars to everybody.
But even our government is doing that, right? We've already started transferring money, the 6,000 rupees.
Or to farmers
Yeah,
and...
the farmers are the majority of this country, right?
Okay.
So, we have done it before Hong Kong, actually. Though
So-
that was just before elections.
Some orange on this side. Let's have some... Devang bhai.
No, so I can again say that those two countries are very different. Hong Kong again belongs to China or whatever. We are very different countries. We are a consumption-driven nation. वो capex-driven nation है. Business वहाँ पे ज़्यादा है. So I can't compare both, but budget हमेशा disappoint ही करता है क्योंकि हम इतना expectations लेके जाते हैं. We always say ये आएगा वो आएगा. जो बोलते हैं हम TV पे जाके वो कभी नहीं आता है. Right? So please don't get disappointed. There are a lot of small points in the budget which will over a eventual period help. Or government has no business to be in business. वो खाली एक facility दे कि business ठीक हो सके. That is, I think, enough. So I'm not very disappointed from the budget this time around, to be very fair.
Okay, so read Outlook Money because they give you distilled wisdom. Don't believe what all we say on TV. Correct, Arindam? This is a paid advertisement. Kedar? Any other question?
Oh, so, why are we seeing FIs pulling out money in general right now? Can you throw some light on that?
Yeah, see, 23% of the market is owned by FIs. So when there is global risk off, they look around where can they take money out from. And India, especially in the top 50 stocks, that impact cost is not there. So you can take out 2,000, 3,000 crores without really killing the market. So we pay a price for being a large market, a solvent, liquid market. That is one. Second, we get good number of flows, though it is just 4% of total global flows every year that we get in. So if we get 40 billion, the total global flows are $1 trillion plus. Most of it is in the US Treasury, US gilts. So we get a small portion, but it's big for us. And they can take it out when they want it. So that's the small answer.
Unfortunately, we're run out of time, ladies and gentlemen. But can we please put our hands together in a big round of applause for this absolutely amazing panel, packed with insights and, of course, very entertaining as well. Mr. Bagga, thank you so much for moderating it. And gentlemen, I'm going to request you to exit from backstage. We'd need to take some quick bites there. Thank you so much. Thank you. Time, ladies and gentlemen.